Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers on this Sunday, January 25th, 2026.
That's right. Today, we're diving into some really interesting and frankly a bit complex market commentary collected yesterday, Saturday, January 24th. RAI flagged quite a few posts highlighting a handful of distinct stocks.
Yeah, the sentiment out there is a real mixed bag today. We're seeing strong community enthusiasm around some groundbreaking technologies, hinting at massive growth potential.
But as always, we've got to look under the hood. While the tech discussions are undeniably exciting, the underlying financial metrics for some of these companies present some pretty significant risks, making for a fascinating, if sometimes cautionary hunt.
All right, let's jump straight into it with our first ticker, RAIN, which is Rain Enhancement Technologies Holdco, Inc. Now, the main discussion we picked up was actually a deep dive into Impinj, a key player in RAIN RFID technology. But, it paints an incredibly bullish picture for the entire RAIN RFID market.
And that's where we need to be careful, Ethan. The optimism is clearly for the technology, which is fantastic. But when we look at the company RAIN specifically, the financials are, well, they're a bit grim. This is a microcap company sitting at a $24 million market cap and currently unprofitable with a net profit margin and operating margin of 0.0% and negative EPS. It also has negative shareholder equity, according to its price-to-book ratio. These are some serious red flags for financial health.
I hear you, Brooke, but let's not overlook the potential here. The post talks about a 20x growth potential as RAIN RFID expands from industrial use to the vast consumer market. Imagine these tags in every product, every smartphone. The European DPP initiative is seen as a backdoor into the real endgame, retail consumers, and integration into Qualcomm's mobile processors could unlock tons more potential. Plus, we've seen some recent news suggesting RAIN price hits new all-time high, but chart shows this is just the beginning, and insiders have been buying up nearly 10% of total insider shares. That tells me there's some internal confidence that the company can capitalize on this massive market shift.
Insider buying is a positive signal, no doubt. But even with that, the current state of affairs for RAIN Enhancement Technologies is deeply concerning. For that 20x growth to materialize for this company, it would need to make a dramatic turnaround from its current unprofitable state, and quickly. While the broader market for RAIN RFID tech is certainly promising, the specific company RAIN, with its distressed KPIs, should be approached with extreme caution. This isn't a situation where a little bit of growth will fix things. It needs a monumental shift.
You're right, it needs a significant catalyst. And while the market commentary is overwhelmingly bullish on the technology, connecting that directly to a financial turnaround for this specific company based on current metrics is a stretch.
So for RAIN, despite the exciting technology, our AI-generated insights suggest a clear path.
Yeah, I think it has to be a stay away for now, at least until we see some demonstrable improvement in their financials or clearer evidence they can capture this market. The potential is there, but so is the risk.
Exactly. Next up, we have HBM. Now, this one's a bit of a data puzzle, Ethan. The user discussion is about high bandwidth memory technology and companies like Micron, hinting at a memory supercycle driven by AI. And that's really exciting stuff. The commentary is very bullish on HBM, projecting supply shortages well into 2028, even the 2030s. They're talking about Micron trading at a significant PE discount compared to other AI leaders, despite 100% projected revenue growth. There's even talk of a $7.8 million insider purchase at Micron. That's a strong vote of confidence for the technology and the companies building it. But here's the critical distinction. The ticker symbol HBM actually belongs to Hudbay Minerals, Inc., a mining company, not a high-bandwidth memory manufacturer. So while the sentiment for HBM technology is very bullish, that simply doesn't apply to Hudbay Minerals. And when we look at Hudbay's KPIs, we see some troubling figures.
Oh, that's a crucial point, Brooke. So we're not talking apples to apples here. Far from it. Hudbay Minerals has an extremely high debt-to-equity ratio of nearly 39. That indicates a heavily levered company, which is a major financial risk. On top of that, their revenue growth is negative, showing a nearly 29% decline. A shrinking top line for a company with such high debt is a big concern. Ouch. And I see it's trading near its 52-week high, but with a beta of over 2.0, so it's highly volatile. That combination, near a peak with underlying financial issues, is definitely a heightened risk. I do see some insider buying for Hudbay Minerals, about 0.87% of shares, which is a positive, but it's a small percentage. Indeed.
And for Hudbay Minerals, we've actually rated them stay away twice before, in early and mid-December of last year, so the concerns aren't no. While an upcoming earnings report in February could, in theory, shift the narrative, the current KPIs for Hudbay Minerals itself are quite alarming.
So the exciting market commentary about HBM technology, unfortunately, isn't applicable to the stock symbol HBM in this case. The mining company presents significant financial challenges.
Precisely. So for HBM, Hudbay Minerals, based on its financials, our speculative analysis leads to the same conclusion as before.
It's a stay away from us.
All right, let's round up our findings for today's market commentary. Investigate as buy, none. Investigate as cautious buy, none. Investigate as speculative gamble, Rain Enhancement Technologies Holdco Inc., RAIN.
And that wraps up another episode of the Daily Hunt for Multibaggers.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Absolutely. Thank you for joining us today. We'll be back tomorrow with more AI-generated insights to help you on your hunt. Happy hunting, everyone.